Hello and welcome to the Switzer Property Insights brought to you by NAB. Well, property is definitely pretty hot at the moment, and in Australia we really love our real estate. I don't like to gloat, but at the Switzer Super Report we called the property market way back in February, March of last year, and values and auction clearance rates have been on a steady climb upwards ever since. Recently you might have also heard talk of a bubble in the property market, but I'm not a bubble boy. I don't think property prices are going to crash anytime soon. As I said, we've been watching the data for a long time now, and it was coming off a very, very low base. At the Switzer Super Report, we think we should see price growth into next year with some levelling off as soon as it looks like interest rate rises are imminent. The risk to this outlook would be things like rising unemployment and quicker than expected interest rate rises. And any good investor knows that property prices don't always go up. Just ask RBA Governor Glenn Stevens, who recently reminded us of exactly that. So what's hot in property? Well, it all depends on what you want. Capital growth or yield? Over the past 12 months, prices in Sydney have jumped by over 16.2%. Sydney is still going gangbusters. Auction clearance rates in the city have been hovering just under 80% lately, which is really unusual for winter when the cold weather usually keeps people way away from auctions. The growth trend is also moving down south. Melbourne values were the better performer over the August quarter. They were up 6.4% compared to Sydney's 5%. Other capital cities haven't been doing as well, though Canberra did pick up a bit. Interest rates are still pretty low, as you know, and are going to stay there for some time. So I think there's still room for growth, even in Sydney, for property price values, if you're after capital growth. However, you won't get much in the way of yield in Sydney. Darwin actually has the highest rental yields of 5.9% for houses and 5.8% for units. Sydney's gross rental yields have dropped from 4.1% to 3.6%, and in Melbourne they've dropped to 3.2% over the past year. If you're after yield and affordability, then you could do worse than look at Hobart. Rental yields there for both houses and units are 5.2%, and with median dwelling prices of $310,000, it's less than half the price of Sydney. There's a lot to be said for buying an investment property away from where you actually live. It's one way to diversify, and if you do good research and use a buyer's agent and other such experts, you could end up better off overall. Thanks for joining us today, and happy investing.